Hai, Assalamualaikum warahmatullahi wabarakatuh. Today, I and my friends would like to present about the financial crisis around the globe, which is we call it as an inflation. So, this is my team member. The first one is me, Nurul, Izzatul, Amira, Binti, Baharudin. The second one is Siti, Hajar, Nirwara, Binti, Azwan. The third one is Siti, Nurhamizah, Binti, Aziz. The fourth one is Mohamed, Fahmi bin Mohamed, Sahrudin. So, what is inflation? Inflation is the decline of purchasing power of given currency over time. The increase of an average price level of a basket of selected goods and services in economy over some period of time can be reflected when a quantity estimate of the rate at which decline in power occurs. There are three categories benefit from the inflation. The first one is trade or investor. The investor can enjoy a boost if they hold assets in markets affected by the inflation. The second one is the company. If the company can charge more for their product as a result of a surge in demand for their goods, they may reap the rewards of inflation. The third one is business owner. The business owner can deliberately withhold supplies from the market, allowing prices to rise to a favorable level. There are four causes of the inflation. The first one is cost push inflation, which is when the prices increase due to the increase in production costs, such as raw material and wages. The second one is demand pull inflation, caused by strong consumer demand for a product or service. The third one is the housing market, which has been seen its ups and downs over the years. And the fourth one is inflationary fiscal policy, which is by the government can increase the amount of discretionary income for both business and consumer.
We are going to the next slide, which is who benefits from inflation. One of the consumers can have benefit during inflation is the trader or investor. The investors can enjoy a boost if they hold assets in markets affected by inflation. For example, those who are invested in energy companies might see a rise in their stock price if energy prices are rising. If the company can charge more for their products as a result of a surge in demand for their goods, they may reap the rewards of inflation. If the economy is performing well and housing demand is high, home building companies can charge higher price for selling homes. In other words, inflation can provide business with pricing power and increase their profit margins. If profit margins are rising, it means the price that companies charge for their products are increasing at a faster rate than increase in production costs. Instead of that, the business owners can deliberately withhold supplies from the market, allowing price to rise to a favorable level. However, companies can also be hurt by inflation if it's the result of a surge in production costs. Companies are at risk if they are unable to pass on the higher costs to consumers through higher price. So, I will pass to my partner, Nurhamizah, which is what cause of inflation. Thank you.
What cause of inflation? There are various factors that can drive price or inflation in an economy. Typically, inflation results from an increase in production cost or an increase in demand for product and service. Firstly is cost push inflation. Cost push inflation occurs when price increase due to increase in production costs, such as raw materials and wage. The demand for goods is unchanged while the supply of goods declines due to the highest cost of production. As a result, due to the higher cost in production will be the higher price for finished goods to end customer. Secondly is demand pull inflation. Demand pull inflation can be caused by strong consumer demand for a product or service. When there is a in demand for a wide breadth of goods across an economy, their price tend to increase. Meanwhile, we do not consider for a short-term imbalance of supply and demand. Sustained demand can reverberate in economy and rise costs for other goods lead to the result is demand pull inflation. Thirdly is the housing market. The housing market has been seeing its ups and downs over the year. If homes are demand because the economy is experiencing an expansion, home price will rise. The demand also impact ancillary product and service that support the house industry. Construction products such as lumber and steel, as well as the nail derivative used in home made, all see increase in demand, resulting for higher demand for home. Lastly is expansionary fiscal policy. By government can increase the amount of discretionary income for both business and consumer. If a government cut tax, the business may spend it on capital improvement, employee compensation, or new hiring. Consumer may purchase more goods as well. The government could also stimulate the economy by increased spending on infrastructure projects. The result could be an increase in demand for goods and service, leading to price increase.
Assalamualaikum warahmatullahi wabarakatuh. I'm Siti Hajar Nirwara, Binti Azwan Bu. Today I will present about the impact of inflation toward economy. The first one is a errors purchasing power. So the inflation is a decrease of the purchasing power of currency due to rise in price across the economy. So within living memory, the average price of a cup of coffee was a dime. So today is the price of is closer to $3. Such a price change could conceivably have resulted from a surge in the popularity of coffee, or price pooling by a cartel of coffee producer, or years of devastating drought, flooding, or conflict in a key coffee growing region. The second one is encourage spending investing. A predictable response to this declining purchasing power is to buy now rather than later. So cash will only lose value, so it is better to get your shopping out of the way and stock up on things that probably won't lose value. So the third one is causes more inflation. Unfortunately, the urge to spend and invest in the face of inflation tends to boost inflation in turn, creating a potentially catastrophic feedback loop. So as people and businesses spend more quickly in an effort to reduce the time they hold their depreciating currency, so the economy finds itself awash in cash no one particularly wants. In other words, the supply of money outstrips the demand, and the price of money, the purchasing power of currency, fall at an ever faster rate. The fourth one is raises the cost of borrowing. So as this example of hyperinflation show, rates that have a powerful incentive to keep price rises in check. So for the past century in the US, the approach has been to manage inflation using monetary policy. To do so, the Federal Reserve, that is the US Central Bank, relies on the relationship between the inflation and interest rates. So if interest rates are low, companies and individuals can borrow cheaply to start a business, earn a degree, hire a new worker. In other words, low rates encourage spending and investing, which generally stop inflation in turn. The fifth one is lowers the cost of borrowing. When there is no central bank, or when central bankers are beholden to elected politicians, inflation will generally lower borrowing costs. So say you borrow 1,000 at a 5% annual rate of interest. If inflation is 10%, the real value of your debt is decreasing faster than the combined interest and principal you're paying off. So when the level of household debt are high, politicians find it electorally profitably to print money. stoking inflation, and whisking away voter obligation. Next is reduces unemployment. So the relationship between the inflation and unemployment has traditionally been an inverse correlation. However, this relationship is more complicated than it appears at first glance, and it has broken down on a number of occasions over the past 50 years. Since inflation and employment and unemployment are some of the most closely monitored economic indicators, we are deep into their relationship and how they affect the overall economy. So the next of impact inflation toward economy is the increases growth. Typically, higher inflation is caused by strong economic growth. So if aggregate demand in an economy expands faster than aggregate supply, we will expect to see a higher inflation rate. If the demand is rising faster than supply, this suggests that economic growth is higher than the long-run sustainable rate of growth. Okay, the next one is reduces employment growth. We will talk about inflation's benefit is likely to sound strange to those who remember the economic woes of the 1970s. When growth is low, unemployment is high, and inflation is in double digits. Okay, the last one is the weakness or strange currency. The high inflation is usually associated with a slumping exchange rate. Through this is generally a case of the weaker currency leading to inflation, not the other way around. Economy that imports significant amounts of goods, which for now is just about every economy must pay more for this import in local currency term when their currencies fall against those of their trading partners. So that's all from me for the impact of inflation for economy. Thank you.